What is up, everybody? This is Vinny, or Vincent, however you may know me. This is my first ever trading video, and I've had a whole bunch of you guys hit me up asking me how do you start trading, or how do you even trade, and what's my strategy. And as much as I would like to talk to you guys about it and introduce you guys and teach you guys, I only have so much time on my hands, and I figured that if I made a YouTube video about it, it would be a lot easier to get my word across. And so I'll do my best to explain everything. I've already made a little video about it, and I'm gonna speed run it because in my other video I spent 20 minutes talking, and I don't want you guys to have to listen to 20 minutes. So I'll try to make this as fast as possible. And with that, there might be some gaps in knowledge, but if you have any questions, feel free to hit me up. And yeah, so I'm gonna go over the basics real quick. I already have everything charted out. But this is NASDAQ, and what you want to look for, what you want to understand is basically swing highs and swing lows. This is how you're going to be properly able to draw your standard deviations. Basically, a swing high and swing low is a 3-candle formation where the middle candle has a wick taller than the two right next to it. This would be considered a swing high. Now, swing low is the same exact thing, except the middle wick is longer than the two next to it. So then this would be considered a swing low. Alright, so now we got that across. You understand swing high and swing low, and then you'll be able to properly draw your standard deviations. And so, how you draw your standard deviation would be from left to right. From right to left. Right? Sometimes you could draw it right to left. Sometimes you could draw it left to right, my bad. But this really depends. I really suggest you guys study up on something called AMD, and it's also called Power of 3. And basically, if you do understand PO3, I will quickly explain why you draw right to left. Right here, you have accumulation where price just goes sideways. You manipulate down and then you distribute up. So the reason why you measure from right to left is because you're measuring manipulation. If this is the manipulation, you have to measure right to left because that's where the manipulation took place. But if you measure the other way, you measure from left to right, you're measuring the distribution, which is a little bit improper. However, there are certain cases where if this manipulation is too large, you can measure the smaller move to anticipate the bigger move. And I'll explain that as well. But these are the core concepts you need to understand. So you need to understand swing high, swing low, and the drawing from left to right and right to left. And now you need to understand how is your projection invalidated. So when I draw this projection, I'm expecting price to come up and hit these levels. But if price doesn't go up and hit those levels and it goes down like this, like that, then this projection is now invalidated because you took out this low. Because price didn't go where you wanted it to. So I would delete that projection and then I would redraw it. So I would redraw that projection to go to the downside like this. Now, you're expecting price to go down here within this area, but if it doesn't and it breaks past this high, just like this, it's going the wrong way, breaks past it or wicks out of it or just slightly out of it, this projection is now invalid to me. So then I would delete this and I would draw my new projection. And so this specific way I have of drawing my projections helps me determine my bias, and then I can find the reversals. So take this core concept in, and then you'll learn how to draw my things. So 4 minutes in already, so I'll go do this. How I trade is go to the 15-minute chart, find midnight opening price, which is 12 a.m. New York time. I'll draw it from swing high to swing low, so this swing high to this swing low, from right to left, and then I'd wait to see if we break past this high, because if we do, this projection is invalid. And as you can see, we never break past it. And now I'm waiting for one of my levels to get hit. So as you can see, hit my level right here. So hop down to the lower time frame, which is the 1 minute, 5 minute, and it hit this negative 2.25 right here. Now what I look for when we tap is lower time frame entries. So what I'll look for is a 1 minute inverse. This would be it. This is a very basic entry level setup, just 1 minute inverse, and then you would take this long right here once you fully close out of it, just like this, and then you put your stops all the way at the bottom. That's a fat stop, so you can use discretionary input, put it at this open, or you could put it at the bottom of this fair value gap. It's really discretionary. And then what you would do is you would ride this up, but you can even drop down to a lower time frame. All right, and then you can get a buddy of mine. He got this lower time frame entry right here based off of this 30-second change in state delivery right here, where you get this candle closure, where you get these candle closures above the opening right here, and you retest the cisd. Boom boom, easy work. Now you put your stops at this low. Instead of running a 30 or 40 80 point stop, now you're running a 10 point stop. Now how you find your levels now to target would be relatively simple. So as I mentioned earlier, drawing from right to left and left to right is discretionary. Most of the time you would always draw right to left, but if you're measuring something this large, because check it out, we have a swing low right here, but our next swing high is right here. If you measure something this large, it's kind of difficult. This is 200 points. So what you would do instead is measure from left to right. So measure from this one to this one, and then these will serve as your targets. So this would be your negative 3.5 target, and then you basically top tick your exit. And then so if you weren't able to catch the longs right here, then you'd be able to catch the shorts. This was literally Thursday. You would be able to catch these shorts, and how you would do it is, check it out, you tap your 1 minute projection, you reversed off of it, and you probably even have a low time frame inverse for value gap. Yep, right there. You inverse this 30-second like that, candle closure outside of it, retest into it, that's your entry. Or you can have another entry. So this is the 1 minute. This is a 1 minute cisd right there. So then if you take consequence encroachment, which is also the middle of it, this white line, put your limit there, uptick this with literally 2.75 points of drawdown, and then you would take your standard deviation for your levels. You draw it from this swing high to this swing low. This is from right to left, and then you would literally just target the -2, -2.5, -2.25, or -3, -4. So any of these, and basically, as you can tell, you bottom tick your exit. Now, what gives me more confirmation is probably one of the best confluences I have to pair with my standard deviation so far is this SMT. And it's just not a normal SMT, it's called a CVD SMT. And I don't know why my CVD indicator isn't really working too well, but CVD gives you entries, not entries, sorry. It shows you the buying pressure and selling volume, or whatever. I'm not really too big on order flow, but I do need order flow in my trading, and I'm using CVD divergences to show me absorption and everything in this market. And so basically, this is your CVD SMT. I had taken this trade. If you can tell right here, we have this high right here where right here where my cursor is. I'm not sure if you can see it, but then over here on these lows we have that high as well. That represents the buying volume or the buying pressure at this price point. But now we've broken past that price point. We tapped the daily open, we tapped midnight, I believe, and we also tapped the negative 3.5. And so we shot past this high, except we didn't have the buying pressure to confirm it. And so that is a sign of absorption, if I'm not mistaken. And so then that means if you took this trade and you put your stops at the highs, this would be a valid trade. That's like my number one confirmation on this level. So then take those shorts, do that, and then you take out a low. I normally go break even after we take out a low. So shorts right here. Once we take out this low, I'm break even. So then just let this ride. You can trim some contracts at -2 and a full TP at -3.5. And then this will be another entry, if you couldn't tell. And you probably have another SMT, CVD SMT right here. I wish my thing was working, but you get the gist. And then so where would your targets be? This is literally broken if I literally show you. Start from here to here, boom boom. From swing low to swing high, you could do this one or this one. It's kind of discretionary. I like to do the biggest one because they're just so similar in price. And you could see possible reversion here, 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 or here. And then you just double check with your CVD. And then looks like we're on to a whole new day. But now we're at night. So took these shorts right off of this. For some reason, it would be up currently 44 points. And then stopped out, break even, or whatnot. This is literally how I trade, and yeah, easy work, right? And then yeah, I don't want to make you guys watch another super long video, but it happened over here on the 22nd. It literally happens every single day, and you just have to execute it perfectly. Midnight deviation right here. I rewind this. I'm not going to talk through everything, but boom, here's midnight. You draw the deviation from up here, from this black to this black, or to this black, or to a swing. And then once you draw this deviation, you broke past this high. These deviations are invalid. You draw a bullish projection, and if you break past this low, that deviation is invalid, and you have this bearish deviation. Boom, you broke past this low, your bullish deviation would be invalid, and so now you have this bearish deviation. Now you're looking for price to come down to here, and it's so that you can take a trade. So continue down. Boom, price taps at -2.25, sweeps out this low, and then when you take a look at that price action right here, you see that CVD divergence nice and clear. On this low, we had this much selling pressure. Right here at this low, we didn't have as much selling pressure, but we pushed further. This is your sign of entry right here. If not, probably even take this right here. This is a 15-minute cisd. You could probably get an even better entry off the 1 minute. So right after we tap my levels and I see that SMT form, look at this. Take that trade right here, especially off this whatever. I don't remember my thought process at this time, but boom, just like this. And then how you would find your projections is this projection is now invalid because we swept past that low. You would just draw it like this, and then you just target midnight. Boom, TP hit. Now let's see if we get reversion at this -3 or -4. Boom, and you just leave runners. It's literally that simple. And then this is like New York Open. You traded for New York Open, and then you're basically already done for the day. You got 100 points, 150. It's 200 if you left runners. It's really that simple. Yeah. If you have any questions, feel free to let me know. I'm always here to help.